Hello, everyone, and welcome to today's webinar, What Comes Next? How COVID-19 is Changing the Future of Entrepreneurship. My name is Freddie Coffey. I serve as Digital Marketing Manager at JumpStart. I'm also a small business owner as well as Founder and Chief Leisure Officer of Brewboat Cleveland. So, cheap plug for me there to check that out. But today I am pleased to be your moderator for what I think is going to be a very important discussion. In the coming months, the economy is going to begin its long march back from an unprecedented pandemic-induced recession. And I know we say that word unprecedented all the time, but we say it all the time now because it's true, and that's what we're dealing with. And the reality in that is that some startups and small businesses will shut down during this time. Others are going to be forever changed by adversity that they are facing or that they have faced. And at the same time, some entrepreneurs are finding their future in the new opportunities revealed to them by this crisis. So today we're going to attempt to look forward a little bit and talk about what comes next. We've got a great panel of JumpStart advisors and experts who have been through tough times before and are currently focused on helping entrepreneurs plan their next moves. With that, let's start the introductions. I'm just going to go around the horn in the order that I see everybody. It may not be the order that you see them. And we will start with Heather Hall.
Got a snoring dog behind me, so I kept you guys on mute. Heather Hall, I'm an entrepreneur in residence at JumpStart. My area of focus is software and technology. Have been with JumpStart for about 18 months. Prior to that, have done a number of software startups, primarily in the marketing technology space. Have weathered 2 rounds of unforeseen, specifically 2008, and had the joy of living in the Manhattan area during 9/11 and was smack dab in the middle of startup at that time. So been there, done that. We'll share whatever battle scars I have.
Ann Ritchie.
Hi, I'm a venture partner at JumpStart. So I help tech and mostly non-tech companies grow. My area of expertise is finance. I'm a former workout banker, so I have been in a lot of situations similar to what we're going through now. I was also in 2008 CFO of a company that we were trying to turn around. So hopefully I can add some insights from those experiences today.
Thanks, Ann. Bill?
My name is Bill Nemeth. I run the Burton D. Morgan Mentoring Program at JumpStart. I work with universities on commercializing technology as well. My background is a recovering serial entrepreneur. I've been through a couple meltdowns. I had the great fortune of starting a company in 1999, an information technology company right before the dot-com bubble burst. Made it through that, Mr. Timing, and then the 2008 financial meltdown, Great Recession after that, came out the other side. So going to share the scars that I've learned, but also how to get out of it, because I started it in the pit. So thanks, Freddie.
Thanks, Bill. Adam?
Thanks, Freddie. I'm a partner for entrepreneurial services at JumpStart. So I work with a lot of our entrepreneurs, both tech and non-tech, across Northwest Ohio and now some in Northeast Ohio as well. I've been with JumpStart for about 1.5 years now. It's been a great experience. Like a lot of the people on the panel and at JumpStart, I'm also a serial entrepreneur. Been very fortunate to be around a lot on the lending and debt side. We do some asset-backed lending, and I've also been around a good amount of technology startups and private equity, venture capital type things, and also spent a bunch of time coaching college football. So I was actually I was on a college campus in 2008, so a little different perspective there. So this is my first real meltdown, both as an entrepreneur myself and somebody who's trying to assist other entrepreneurs as well.
And last but not least, John Grimm.
Hey, thanks, Freddie. Good to hear from everybody else. I'm what they call a CFO in residence at JumpStart, and I primarily promote good financial practices across client companies and in the network. I also assist early stage businesses raising capital and then executing once they have raised capital. Before, I've gone through a couple of ups and downs in the economy. Before JumpStart, I was involved in a software company. It was in the digital marketing data management space. And we started that up in 2003, just post, the bubble and 9/11. And we had to operate through 08, 09 too, so that was interesting.
Thanks, John. And thanks everyone for joining us today on what is probably the one day of the week that we've all done our hair. So I appreciate you. Or maybe that's me. Maybe that's just me. So let's kick things off and take a high level look at what we think we're in for over the next few years. We know that post-recession entrepreneurship is very different from what we've seen and even gotten used to in the booming economy of the last decade. And Bill, I'll start with you because, as you mentioned, you've been through a couple of these situations in the past. While this is certainly different than both 2000, 2008, there's still a lot of similarities. What are some of the things we can expect to see, in this new operating environment?
You're gonna see people trying to find their footing, trying to find a new business model to go forward. You're gonna see entrepreneurs that freeze in place, but you're also gonna see quite a few that are gonna say, hey, there's a real opportunity here. There's a real opportunity in this new normal that we're gonna exist in. Can I pivot the way I do things to take advantage of what's going on? I think entrepreneurs are going to be way more cost sensitive in how they spend their money and use the investment that they have. I think bootstrapping is going to come back, and I think you're going to see a lot more companies, kind of rise up as people try to make their own opportunities.
How does this is maybe a question for Ann first. How does a high unemployment rate factor in to the entrepreneurial environment? We know that a lot of people are laid off or furloughed. Can we expect to see a lot more startups as subject matter experts in different areas that were laid off or furloughed have time to think and create?
I think you do have a lot of idle people. So I do think there will be a lot of new businesses started. I also think it's a great time to acquire talent if you are in a position where you can hire, because there are people moving. The hard part is when people aren't working, they don't spend. So it's a double-edged sword, but I do think there's a lot of people sitting at home thinking of the next great cool idea, which is fun.
Heather, does that apply do you think in both the tech sector as well as the small business sector? Does it lean more one way or the other?
So the way that I tend to view it is, in times like these, the most successful companies or the most opportunistic companies are going to find a solution based on a problem. And problems can be regional, they can be national, they can be global. I personally have been spending a lot of time thinking about some of the conundrums we have right now with our infrastructure, with education, things like that. Those can be analog, they can be digital, they can be a number of different things. It's really thinking differently. And, Ann and Bill have both alluded to this, but the ability to really stop and think about, this is what I need to solve for. Now, how am I going to do it? Don't let the constraints of what the situation, and by situation, I mean, I don't know technology, or I've traditionally focused in this area. I think more about it in the sense of, this is what I've got to do. Now, how am I going to get there? And doing that in a very iterative fashion. When you look at the companies that have been born out of downtimes or crisis, if you will, and the innovation that's come off of that, there's huge opportunity here. It's just really kind of stepping back and what's the problem, and then how do I address it?
So lots of opportunity for problem solving, as long as people can identify those opportunities. A lot of people thinking about problem solving with extra time on their hands, but not a lot of money going around in the market. John, what does saturation of the market mean for competition? How does a high volume of new businesses being created, but maybe not a lot of money going around, change the landscape?
Well, I think you're going to see, like Heather and Ann mentioned, there's going to be a lot of new businesses of a variety of forms across the spectrum. Whether it's a small business or a medium-sized business. And quite frankly, I think you're going to see consolidation or, maybe even some shrinkage in some industries at first before you see saturation. So you should see opportunity coming out the backside. No one knows how fast anything's going to ramp up at this point, but there's clearly industries that are more agnostic to the COVID environment, and there's some that are just killed by the environment. So I think you're going to see a real focus on the industries and businesses that are more agnostic in this environment. So I wouldn't be worried about saturation until the economy's really back at full scale. And who knows how long that's going to take.
That's great. Thanks, John. We're going to get into how to identify some of those opportunities and markets that we're seeing a little bit of more opportunity for innovation and things like that, and then how to identify that here in a little bit. Adam, let me jump to you with kind of all these things that everybody's thrown in so far. What does that mean for startups that are fundraising, whether they're looking for investment, whether it's maybe a small business that's looking for some to take on some debt to either grow or begin? What does the fundraising kind of arena for companies look like right now?
Yeah, and a lot of good points made already, and I think that it's all very true. I mean, and at the end of the day, for me, kind of from a macro standpoint, a couple of people pointed out there's just so much uncertainty, and so obviously you want to be doing research and understanding your market and are there funds available and all the different areas that funding can come from. But at the end of the day, I think there's a lot of money on the sidelines, and I think there are opportunities to raise money, be that from private investors or from banks. But I think maybe we're in a world where your ability to demonstrate value and your ability to demonstrate revenue and kind of stickiness in the market is just going to be that much more amplified than it would be, because what I see sort of in the fund and banking world is there's money on the sidelines, but people are having a hard time pricing risk and sort of understanding, and I don't want to get too kind of economic and macro, but we're in a little bit of a deflationary world here, and so as those things all come together, to John's point about some reduction in the market, it just more intensifies the need to really stand out and demonstrate your position in the market and your value add for your customers.
So Adam, I'll stick with you, and then we'll kind of go around the horn here on this. How is JumpStart preparing for this, and even specifically in your role of working with entrepreneurs, and we can kind of discuss in the different ways that everybody's capacity is in on what we're doing for that.
Freddie, that's a great question, and I'm gonna keep it pretty high level because I want to hear what everybody else says, and we communicate a lot of just the people on this call as well. But I think the one thing, maybe more than anything else, and obviously there's a lot going on. Everybody's seen all the profiles that our tremendous marketing team has done on some of our businesses that are pivoting. But the thing that I kind of take away from all of them is there is so much information out there, and it can be information overload, and you don't know what to do, and you don't know what to pivot or not pivot, or shut it down or not shut it down, or sit on your hands or not. And I think the thing that is, that's important to always be talking to people and understanding what's out there and the kind of world we're in. But at the end of the day, I go back to, it's really no different than it ever is, which is you have to make a decision with the information that you have best available and do the next right thing, whatever you think it is, and just keep pivoting and tinkering and swiveling from there. So that's kind of the one takeaway from all the stuff that I'm around, JumpStart and in private business.
How about you, Ann? How are you in your role of working with the companies that you work, preparing them for if they're looking for funding, and how are you tackling that with the companies that you're consulting with?
Sure. So I'm the workout person, so I'm the I see the dark side very clearly. I'm just really encouraging entrepreneurs to prepare for the next wave. So, and it can be disheartening, but so any retail focused company is going to get a surge now, maybe, but it's coming back. It's going to be worse. It's going to be at a different time of year. And so how do you make hay while the sun shines, but also not be blinded to the fact that this is not, it's probably going to be worse when it comes back, and it's probably going to be longer. And people are going to have mental fatigue. So all the upside that people are seeing now, it's going to start weighing more heavily. So I'm really encouraging, this is, I'll take off my banker's hat for a second. I'm really encouraging companies to hoard cash, get as much cash as you can. As Adam said, it's a really unique time where there is a lot of money flowing around. Absolutely impossible to price risk when there's grants and 1% loans. All that's going to dry up eventually. And with knowing there's a second round, it's kind of like you need to get as much as you can now to really have a plan for the second time around. There's also there's like big shifts that we just don't know how it's going to play out. I mean, the whole idea of real estate right now, like now that everybody works at home, all these, when I look at all these office space, like there's going to have to be a big seismic change. So there's time to think about it, because again, it's not like we're going to be up and running and it's all going to be behind us in 2 months. It's going to keep coming back. And so you really have to preserve cash in the short term, but really look long term and say, what is going to happen with all this real estate? What is going to happen with retail business models? Because there's innovation there. You just got to survive long enough to take advantage of it.
So a question came in, and I think it's kind of in the same vein here, and it's maybe understanding from the other side. And it was asked specifically for you, John, as the CFO guy. What's the profile of a VC investor who's still looking at deals, and conversely, the profile of VCs who are sheltering in place, trying to get in the mindset of where the money is coming from? Do you have an insight on that?
A little bit, yeah. So what most venture capital firms are doing right now is they're still looking for prospects and potential companies to invest in. Some of them are really pulling in the reins though, and just looking at their current portfolio companies. And you would definitely want to, if you're looking for venture capital money, you definitely want to understand what they're doing. And I think most of them be ready to tell you that they're either shepherding their flock or they're really looking for new investments, because you don't want to go waste your time talking to somebody that's really not in the market right now. There's an awful lot of money out there, as I think Adam mentioned, if I'm correct. And it's going to be very, I think, particular in where that money goes. There's a whole spectrum of VCs out there, in terms of the size of the deals, and then they're also get ranked in terms of their returns. And I think you're going to see a lot of the lowerly ranked firms that don't really have good returns fall out of the market and not be able to raise additional capital. And you don't want to go to those firms. I hate to say that, but it's just a kind of the nature of the beast. And so you definitely want to look for well-heeled firms, but not necessarily the top tier all the time, because the top tier people are looking for giant deals, and it's difficult to access them.
Can I go ahead?
Yeah, go ahead, Bill.
Some of the things that were brought up, and we talked about pricing risk. There's going to be across the board what I term a mark to market. The VCs with money will change the valuations in their favor. Even though there's a lot of money, it's a buyer's market from their standpoint. That also goes back to employment. There's a lot of talent on the street. There's a lot of talent going to be coming out on the street. In 2008 and 2009, there were a lot of people that had a shingle hung out that were able to command $125 an hour for their consulting. Some of them walked away when we said, hey, you got to take a 20% haircut, and they were rehired at $55 an hour. I think we're going to see that across the board on real estate, on financing, on investment. The valuations are going to change across the board.
So I'm glad that you brought up talent, because it's been difficult for startups to hire top talent in a robust economy, in a competitive economy where talent asset is premium. Heather, does this situation kind of offer a little bit of a bright side for building a team for a new company?
I feel like you kind of answered that one to yourself. I mean, absolutely. It does, but it also, there's going to be a lot of talent out there, but it's also asking the honest questions. This is a time not to knee jerk. It's to be really thoughtful and to plan things out. And if I'll pick on Bill because Bill just went. If I knew that Bill were in market and he had a talent that would specifically address what I needed, absolutely. But if it was just, wow, Bill's really smart and I think he could do something, but I'm not sure what, it's being very thoughtful and meticulous. And I think that kind of an overarching macro to all of this that we need to think about is acting with a plan and not reacting. Talent is out there. How is it going to augment what you need, and how do you bring on the right person in the right way? How do you tie that to an actionable, sustainable plan that you can carry on? Instinct in uncertain times is to knee jerk and to react. And you're hearing a subtext through all of us. Take a couple of minutes, take a breath each morning, slow down, think about where you need to go and what you need to be doing so that you can sustain that forward. Otherwise, you could get a month down the path and, wow, Bill, you're great. And I think you're wonderful, but we're not getting where I need to be. And that's not shame on him. That's shame on me for not taking the time to figure that out.
That's great advice. So let's zoom in a little bit. We've been talking pretty high level here. Let's kind of dive down into some specifics around I guess the reality of companies that have to close down or that have to switch gears, pivot. We think we can expect a new wave of startups and small business eventually, but before we get into that, if a company had to close its doors now, can a company come back depending on the reasons why they had to close their doors? And Heather, I'll jump right back to you. What would that look like?
I mean, this is a hard one, and honestly, this is something that I've been dealing with a couple of startups that I work with over the past couple of months, where they were not in a good place and they were thinking about shutting down, and all of a sudden this presents an opportunity. But what does that opportunity look like? How do you take advantage of it? Again, you're hearing all these underlying themes: bootstrapping, accessibility to capital, talent needs. How do you get things going? How do you approach those conversations? You have to be very thoughtful about that and understand what that looks like and what you're going to be willing to do to get there. We've all heard these great stories about people pivoting, taking advantage of quiet time to work in the business versus on the business. I think ultimately at the end of the day, it's always a good day when I can quote Princess Bride. There's a line in Princess Bride where one of the characters says, "We're men of action, lies don't become us." This is a time to be really honest with yourself and what's the opportunity? What can you do? Where can you go? And at the end of the day, what's it going to mean? Because you might be able to bring something out of the mothballs and bring it back, but is it the right thing? Is it the right decision? Can you sustain it? These are all the very hard, honest conversations that you need to have with yourself before you take that leap.
So, Bill, to piggyback off that, what if a business was working? What if the business was profitable, it was running well, and COVID-19 happened and it couldn't survive the financial circumstances? It was a good idea. There were customers, maybe with Ann's banking experience, she would tell them that they weren't managing their financials good enough if they didn't survive. But if that was the sole reason, can the idea be resurrected? And what does that look like?
I'll give you the consulting answer. It depends. And the depending is the did the shock of what we're still going through precipitate it? Because like a restaurant, I couldn't serve my clientele. I mean, I literally couldn't be open. I couldn't make it to the end. I had a huge clientele. Now here's the resurrecting part. Can I survive with 25% capacity? Can I put the same product out there? Can I do it at 50%? How long can I do that? What is my employment? So it's a total rethink of the business model. So if they're willing to change things going forward to this new normal that we're going to exist in, yeah, I mean, restart it, take the opportunity to change what should have been changed before you go back and do it. But then on the other hand, we have businesses that were working, but turns out once the money stopped, once the customers looked at what's going on, they weren't a need to have. They were something that, yeah, we could spend money on and it's okay. And, you know, it's to have this around, but we'll survive without it. If you were in a position there that your business was nominally working, but your customers abandon you, say you have a software product, they abandon you because they really didn't need you, you know, you may not want to bring that idea back because it was being strung along because there was available money in the hands of the customers.
Bill, I feel like you just completely segued into an audience question, which is perfect. How do entrepreneurs change or rethink their business model from being a want to have to a need to have? And I'm going to toss it to Adam, because Adam, I know that there's a few companies that you're working with that are kind of struggling with these things right here. If you want to jump on that first.
Yeah, you know, obviously it's a great question. It's something we're all thinking about every day. And I think a couple of things. I mean, one is I think what Bill said is dead on. I mean, there's pivoting, there's swiveling, there's shutting it down and not throwing good money after bad and you know, going a different direction, or there's just sort of changing your business model. And I'll go back to something a couple people mentioned a little earlier, which is you have to have your finger on the pulse of what's going on, and you have to be out doing customer discovery. All these things that we talk about at JumpStart all the time become that much more important. I mean, how do you go to a need to have is you got to find out what people need to have, or how maybe it's the same thing, but they're needing it in a different way than they did before. So, you know, we have companies that we're working with that have pivoted solely to online. We have software companies who launch new products because they know that people are stuck at home and they're going to be doing more of these things. So, you know, I think it's looking at what you and your family and your business is doing, and looking at what's going on out there. And I go back to, I want to be really careful when I say this, because Heather said something really important. You have to have a plan, and you know, execution is the key, but you also have to try things and continue to pivot. And I don't mean pivot in business model, I just mean pivot in how I'm implementing the solutions I'm creating, and how I'm continue to add value and make myself a need.
Great. So, okay, so worst case scenario, the business didn't survive, but an entrepreneur is going to entrepreneur, right? And it's likely that most of us will try again to our downfall in some ways.
We just don't learn.
That's true. And how do you start looking for that next idea?
I think one thing I want to add was on the wind down, and it can be part of the rebirth, is really looking at your value add. What if your customers disappeared and that you weren't in need, what value were you to them, and what value can you be to them in the future, or new customers? And so as you're winding down, it doesn't have to be a crash and burn. It can be a really big pivot where you really identify what your assets are, what your skills are, and try to either sell them or lease them or monetize them in some way so that it's not a crash and burn. If you are a maker of suit pants at this point, like nobody needs the bottom, right? So how do you be the first to start making suits that you don't have to buy the top and the bottom together, or something like that? So what's your skill and how does it apply to the new world? And also just staying ahead. So I think in coming up with a new idea. I mean, when people say that their business has not been impacted, that's impossible, because if nothing changed, you now have a workforce that is vulnerable to illness. So everything else being equal, everybody is facing that health part of it. But there's so many hidden opportunities in this new, whether it's semi-permanent or permanent, this new change. I find it fascinating that, as much as we say like, oh, what do I need and what do I want? A lot of the companies that I see that are doing really well are these indulgences. The ability to order like bundt cakes delivered to your house at 11 o'clock at night because people are consuming. But again, is that going to last when people are permanently unemployed? Probably not. So it's in terms of building your business, I think it starts with that really, really honest skill assessment, and then figuring out how you can use that skill or that value in the new, with the changed world.
So I know that you said suit pants, but in my headset, for some reason, I heard soup pans. And I was going to argue with you, Ann, because I've been eating so much soup in this quarantine.
Right.
But no, I do want to throw out that, we're going to have some entrepreneurs talking about the specific issues that exactly what you brought up, Ann, next week in our final webinar that's going to kind of wrap up this series, and I'll give a bigger pitch for that later, but I just want to make sure that people are looking out for that, because I think it's going to be, from the entrepreneurs that are kind of in the trenches and dealing with that right now, it's the voice from that side. Yeah, go ahead.
I want to add one thing is, if you had a business that had customers, you still have those customers. Hopefully you have those relationships. And so really lean on those customer relationships and supplier relationships to find your new idea. If you are a restaurant that required people to sit really close and you're done with that business, you still have an audience, again, suppliers and customers that trust you and spent money with you or put business in you. And so it's like, how do you leverage those relationships? Because with so many people and so much time, I think when you can leverage the relationships even more so now, because people are available because they can't go anywhere. So you have access to your customers still, and you need to cull that if you're going to try and start something new. It might not even be something in the same industry, but there's a lot of information about how you service them that could be valuable in your next business.
So this is the happier topic of discussion, and we're not companies that didn't make it, but companies that are swiveling or pivoting. So let's talk about those companies that are making it. I feel like this topic could be like a free-for-all for all you guys. So let's get ready to play the feud. I'll just go around the horn, and then you can all jump in and add anything. But lots of businesses have had to make adjustments to survive, as Ann just mentioned. As a result, they may look very different today than they did even 3 months ago. Let's start with this question. So what do they do if and when some normalcy returns? I don't know how long that's going to be. I don't think any of us really know how long that's going to be. But what are some of those first steps to identify that and to try and grasp some sense of normalcy if things get a little bit back to normal? And I'm just going to start with Heather because she's raising her hand.
I never raise my hand. It's kind of a running joke. I yell at you if you raise your hand. You heard Ann say about talking to customers, of listening to customers. If you're slowing down a little bit each day to pay attention to the data that's coming in, to the feedback you're getting, or even if you're reaching out and asking people what's going on, you're going to be ahead of this and you're going to see it. If you get caught unaware, you're not paying attention. And that sounds really blunt, but it's honest. If I don't give you anything else to take away, talk to a couple of customers every day. Look at your KPIs, whatever they are. If it's transactions, if it's usage, if it's time on app, or however it maps out. What are those key metrics and what's going on? That is going to give you the The customer feedback is going to give you leading indicators. The KPIs will most likely give you lagging indicators, but it'll give you a sense of what's going on and how do you adjust. There's one startup that I've been working with who is going to participate on the panel that Freddie mentioned last week. They made a full-scale pivot and went from consumers to business because they got the feedback of we need help. As things start to change, they might do both, but it doesn't mean that one's going to go away. What does that look like per? It's not always going to be the same. We have another one that we've invited to participate next week. Knock on, I don't have any wood around me, knock on wood, that she'll participate as well. Same thing, full scale pivot. What does that look like down the road? It's going to take listening and dialogue and engagement. And without that, you know, Anne or Heather chirping in the ear of, I bought this last week, but I don't really need it now, but I can't wait till you bring X back. We'll give you that leading sense, as well as, well, you know, this thing I'm making is starting to down cycle. What's that look like? You have control of this. You just have to make the plan and be very, very intentional about how you track it.
So John, are there, sorry, Heather. John, are there, she mentioned KPIs, are there specific financial indicators that dictate or tell you whether you stick with the current plan, whether it's time to, when it's time to shift back if you did make that shift?
Well, yeah, I use the simple indicators first, and that is your revenue. You know, what is your revenue doing? You often can't control your revenue. You can guide it, but you can't control it. So I'm looking at revenue, and if revenue is declining, I know I'm in trouble. The key is predicting how far down it's going to go. And then the other lever you have is expenses, and you would want to look at reducing expenses if your revenue is going down. If it's going the other way, like revenue is going up, then you got to think about why and where could it go, and do I need dollars to invest to support that growth? You know, if you want to get into the weeds, you kind of look at what's the acceleration or deceleration of my revenue versus just like absolute movement from month to month. And if you've got an accelerating position, or I should say decelerating position, that's going down faster and faster every month, you've got to make changes very swift. If it's going down, you know, like a not quite as steep, you may want to think about re-examining your business model, maybe even shrinking and getting rid of customers that are marginally profitable. Even though you're going to be smaller, you're still going to be producing positive cash flow. Going up and growing is, you know, that's a problem we can all deal with. It's on the downside that's much tougher to deal with.
Thanks, John. We are using some acronyms there, and I just want to make sure that we're clear for everybody. Heather, can you define what a KPI is?
Keeping you on mute to keep the snoring dog at bay. Key performance indicator. So like John indicated, that could be revenue. It could be how, if you have an app, how many minutes I'm spending on that app. Am I on daily? Am I on monthly? It could be if you have a physical location, number of people through the store. What are those handful of metrics? I would say 2 or 3 max that really give you a pulse on what's going on.
So maybe those KPIs are indicating that your pivot should continue, and it should be a permanent change for your business. Bill, if a company has pivoted, would you suggest rebranding?
Depends, of course, the consulting answer.
We're going to put a title over you, Bill, that just says the whole time.
Oh no! Oh no!
How do you know? Wait, no. Anyway, the rebranding and the pivoting. I want to add on to what Heather and John have said is take your business plan. You're not General Motors. You're a startup. There isn't the one thing you can do, which is make cars. All bets are off now. So take that and trash that. Same thing goes with, and gain information, do discovery from your customers, look at the markets, look at the data coming in, and alter your path within your framework that you have for your business. Same thing goes with your brand. Like Ann had said earlier, you have customers. There is equity in those customers. You know who they are, they know you, you have some sort of reputation and value to them. Same thing goes with your brand. If you have a brand that is built and is flexible enough to transition to a new pivot, a new line of business, a new way of doing businesses. Don't give up the brand that you've spent the past 5 years building, because that's your quick path into your customers. The other thing I think you have here is a lot of leeway, because there's so much going on. People won't be shocked by you changing what you're doing against an existing brand. Even General Motors is doing that. We are now a transportation company, ride sharing, Uber competitors, feeding into mass transit and autonomous vehicles. That ain't what they did. That ain't what their business plan said. Suddenly they've shifted. So I think our startups, because quite frankly, not a lot of people know who you are unless you've gone national, you can flex your brand quite a bit.
So go ahead, Ann. I was going to go to you next anyway.
Yeah, so I started keeping track of all of my clients, and all but 3 have at some point during this period tried to make masks or hand sanitizer. And I will tell you, it is not the likely winner of the one that actually broke in and is doing that. So I say that to say, it's normally you would not go way out of brand to make hand sanitizers or masks, but there's not a lot of rules now. And I think that you can keep your brand and get a side hustle for this period of time, because it is so fluid. And it's kind of like you gotta go where the opportunity is, even though you know the one that is really successful doing the hand sanitizer, you know, I was really pushing them like, you're not going to be a Gojo, you're not going to be a Purell, but they found a niche and they're selling it. And I doubt in 5 years she will still be selling hand sanitizers, but she took the opportunity and she's being successful at it. Some of the other ones, it was just too far of a stretch, but there's a lot of little side hustles that you can do during this time to bring in cash. And then, you know, when it's all over, you go back to what you were doing. Another example is one client had to switch to a complete digital strategy, and now they're selling that service to all their competitors. So I can show you how to digitize for this period of time. And so that's kind of their side hustle until they can get back to what they really went into business for.
So if you do that side hustle with your business, Adam, I'll toss this to you. If it looks like a temporary thing, switch back to your previous business model, create some sort of hybrid method. When do you know? When do you know that it's time to change? And we'll probably get into KPIs again. But
right, it's funny you asked that question, because I mean, there have been some really smart, intuitive things said. Lucky to have you. We get to work with these people every day with these kind of insights. I mean, everybody said something that has made a lot of sense. And the thing that it's just made me think about, and to your question, you know, as an entrepreneur, I mean, in life, like we aren't. It's not our job to figure out what is normal, when's it going to be normal, when's it not normal. I mean, there's always going to be headwinds, there's always going to be tailwinds, there's always going to be competition. So, you know, take the time, to the point that some of these other people have made, and continue to execute on ideas that you think add value and drive revenue and do all these other things. And if it turns out, to John's point, hey, you're going to know, guess what, at some point, and Ann just said, you're going to stop selling hand sanitizer because the big boys are going to be back in and pricing you out. Or, you know, you're going to have less people logging on to pay you for online content because people are out of the house more. So if you pay attention to the indicators and you pay attention to your business, if you focus your attention on what you can control, which is how you execute on your ideas, your business, your brand, to Bill's point, the rest of that stuff is going to sort itself out. I mean, I guess I would argue that, I mean, certainly this is more not normal than usual, but when's it ever normal? I mean, for an entrepreneur starting a small business, you're always fighting uphill, always headwinds. Just go execute, and if you have to tweak, pivot, do what you got to do. Listen, you know, build a good team of advisors. I mean, I talk to a lot of these people on this call all the time about this kind of stuff, and stay in touch with your customers and your business and your advisors, and just keep trying to execute and innovate. And a lot of that stuff tends to take care of itself, I think.
Heather, you may add to that?
Yeah, as I'm shaking my head emphatically. You teed the question up to Bill about, do you rebrand? And we're talking about all of these different dynamics that are going on. And, I think that there was a comment made earlier about, as entrepreneurs, we don't learn. We just keep going. There's something really interesting in the dynamic here, and Anne's hand sanitizer example is a great one. We're controlling, and this situation is a great one, controlling what you can, your livelihood, your business, your ability to move forward. That is healthy for you mentally. It obviously is healthy for you economically. It's taking care of your business. It's taking care of, to sound philosophical for a second, your soul. But it's also creating a brand for you as an entrepreneur that's going to carry with you. And we've all run into stories where we have entrepreneurs that have adjusted their lens, their approach, things like that. That sticks around, and people remember that, so that even if a business you're doing now fails, there is that culture that you're going to keep pushing forward, that this is a person who's driven, who's going to win, who's going to keep innovating. And those are the things that people keep in mind, and that's going to carry through. The ability to focus on what you can control, to be striving forward, is a huge thing that I would encourage you to always keep in lens as you figure out whatever your plan is. It's also going to help you focus on forward trajectory and not thinking about what's past.
I want to get into that forward trajectory in just a minute here. But before we leave kind of this topic of swivels and pivots, there's one other way, well, there's many ways, but there's one other specific way that companies have been shifting a little bit, maybe not shifting in their business model, but shifting their sales pipeline. And companies have been focused on customer retention through the crisis, specifically, as opposed to maybe new customer acquisition. I want to go to Adam and then John and then Heather and then Phil and then Ann on all these. But when do you get back to that new customer acquisition, Adam? Where do you start?
I don't think you can ever get away from it. I mean, obviously you want to make sure that you're doing what you said you would do for the clients that you have, and providing value and continuing to deliver. But you're always innovating, you're always changing, you're always looking at a new model, new clients. How do I add to the client base, or how do I make what I'm doing more appropriate for a wider group of people? So I mean, I think it just goes back to some of the points that these guys have made when talking about, are you working on your business in addition to in your business, and are you looking at the revenue numbers, the KPI, all the things we've been talking about, and the same stuff we always talk about. I mean, customer discovery. It's just all this is really doing is there's the tide's gone out, and there's a lot of businesses that don't have any swim trunks on, and so this is just, if nothing else, it's forcing you to do all the things that you would normally do better, more innovative, more creative, whatever that may be. So I mean, I to answer your question directly, you're always looking to innovate, to grow. So
yeah, I mean, let me tag on just real briefly, as somebody that had a quota for years and years and years. Who told you to stop selling? I mean, literally, get out there. If you're an entrepreneur, I don't care if you call yourself a CEO, a founder, an inventor, whatever, you're a salesperson. You need to be talking to your customers. I don't care what's in your head and what you think. You got to get out there, get in front of them, and be proactive. Find a way.
There's also, I think, from the, it is a time to steal customers, sadly, because I think people are looking for more from their relationships. So I look at the banking, because I'm an ex-banker, so all the people were calling me about the PPP. And there were 2 banks that just did it right. And I won't mention them, and most of the others didn't. And doing it right when the SBA and everyone's changing the rules is really just keeping in contact with your customer and saying, hey, I don't know what's going on, but I'm going to keep calling you, or I'm not going to have an auto response on my email or my voicemail. And so, as opportunistic as it may sound, I think it's also a time to really service your customers and look for customers that aren't being serviced by who they're with, because I think everyone's leaning on everyone. And so the extent to which you take care of people, people remember that when they come out.
That's a great point, Anne. And
Yeah,
you have to remember that. Oh yeah, go ahead, John.
Like whether you always want to be selling, because in that process, you're always creating brand awareness. And if a customer can't buy now, they may buy down the line, and you just got to keep that brand going out there. And what I've been advising specific clients to do is to look at what are you doing in terms of driving demand gen from either the traditional marketing or digital marketing. And I say, pick out the one thing that's absolutely doing the best for you in your spend in those areas, cut everything else out and double down on those. And that will help you get customers, and you'll spend less money, so it'll be healthier for the business.
It's Freddie, real quick too. I mean, it's exactly right. I mean, at the end of the day, we talk about evaluating your business and metrics. Selling is the absolute best metric, the thing that's going to tell you the most in real time, and more than, I mean, that is the ultimate source of truth. I mean, if you have demand there. So just to double down on what everybody's saying.
And pick up the phone. Emailing, little LinkedIn pings are not selling.
Yeah.
Pick up the phone.
Always be closing. Hey, you got to quote the movie, right?
We've heard that somewhere before.
I was waiting for someone to.
That sales manager.
But it's, you're hearing a subtext here, and it's an interesting dynamic. There's a relationship and solution balance to this. If you're purely relationship, oh, hey, it's great to talk to you. What do you want? Versus if you're all technology, it's hard to empathize. How do you balance those two so that you're there, you're seen as solving a problem, that you're empathetic, that you're caring? Some people would call that social debt, to show that I'm there, that I'm emotionally wedded to it. But always thinking through that. And if you're doing that, you're leading with the feeling of, I am solving your problem or your need. Yeah, it meets me ultimately, but I am addressing your problem. And lead with that lens, you're going to have better traction. But everything should always be moving ahead.
So we've got 7-ish minutes left here, and I do want to quickly, because we've gone from the scary to like less scary a little bit in the topics that we've covered, and I want to talk about opportunity in emerging markets real quickly. We can kind of touch on this, and I'll just give everybody an opportunity to go around. You know, the COVID-19 situation has given some companies a glimpse at their future. There's a couple JumpStart portfolio companies that come to mind, Boxcast, Wiser, that have experienced rapid growth when the market evolved in their direction. So not that they were really niche companies, but they were specific in what they did, and it's suddenly become essential in their industry. If you're a company like that, how do you best take advantage of that so that it doesn't go away once you've got that grasp in your industry, so that as things change and evolve in a way that we're not sure how they will change and evolve, how do you hold on to that success? And I will pick Bill.
Gee, thanks.
And it depends, I know, but.
It depends.
Of course, it depends. No, it's like John said, it's doubling down. I mean, if you found something and it's a wave you can ride, if you get in the door and leverage what Ann said and do something of value, build that relationship, build that brand equity, that reputation, both personally and your company, and prove yourself invaluable, you'll have a chance to figure out with your customer where you can play going forward. So it's not just an emergency response. This may be the catalyst for them to go, oh, wow, we really could use this. You know, we're going to change the way we do business going forward. So like Boxcast, this enables us to do this on an ongoing basis when we don't need the real estate. So look for those opportunities. Once you get a customer, that doesn't mean you're done. back to selling. Talk to them, find out what you're doing, add more value, strengthen that relationship.
So, Anne, I know that you want to jump in on that. I'm gonna ask you an additional question on top of it. Are there particular risks or rewards for trying to ride or predict a trend? It could be, you work with a lot of, traditional small businesses and things like that. It could be decades before we see market demands like we've seen with the masks and PPE and sanitizer and things like that. It's an outlier. So what are the risks or rewards of trying to ride those trends as well?
I think it is a wonderful time for risk takers. If you have, because I mean, to some extent, when things get so bad, there's only upside. And so if you are one of those companies that has an opportunity, I completely agree with the double down strategy. You'll be able to access, I mean, think of the concept of accessing 1% money for a 30% risk. 30%, what would cost 30% or cost equity, right? So if you have an opportunity, but you got to get there first, and to get there first, you need capital. So I think if you have an idea that you believe in and that fits with kind of the way things are going, I say go for it, because you can now get, for a short period of time, get capital that's cheap, that doesn't reflect the risk of what you're doing. And you make big bets. I don't think it's a time to creep along. Time is not on our side, and it's constantly changing. I have the challenge of helping entrepreneurs balance. So if you are in a growing field, you can set the price. But if you're trying to attain customers, if you're a cleaning company, you can double your price at this point. But then you want that client long term. So what I've advised clients is test the market a little bit. If you have a new customer, you can charge them COVID pricing, and when they have to pay it and like your services, you can go back later and say, the market settled down, this is back to my normal pricing structure. You can't go back and raise prices after COVID for the increased cost that you incurred during COVID. So it's kind of like you've got to be really bold now and really creative. And I think it's a time to make the big bets. If you have, I wouldn't make a big bet on opening a restaurant right now, but if it's anything that aligns with the future, go for it, because it's going to be a race to the finish line.
Okay, parting thoughts. We've got a lot to think about today. So as a finale, I just want to go around. I stole this from Bill and his webinar hosting, and ask for one piece of advice or inspirational tidbit, maxim, whatever you want, to give entrepreneurs as we look towards the future and as they look toward either a recovery or their next move. And I'm going to go around in the order I see them again. So I'm going to start with Heather.
So many of the companies that I've dealt with get analysis paralysis when they try and solve everything. Control what you can and make a plan for it. Simple as that.
Anne?
I would say sharpen up your EQ skills. It's a very emotional time for people, and people will remember how you make them feel. And so when you're dealing in these crisis situations, I always ask, how's your family? And once I start hearing too much negative on the family side, I just stop the business stuff and reschedule the call, or indulge them and talk about business later.
Mr. Nemeth?
Two things. Family first. Yeah, you're a human being. You're not Superwoman, you're not Superman, which brings me to the second point. Get help. Talk to other people. You may not be able to see your pivot. You may not be able to see opportunity. You are buried in it. You are at different points miserable and manic and worried and family issues going on. Talk to somebody that has a level view, an outsider's view of what you're doing, and get help.
Adam?
Funny how all this is all great life advice in general. Despite this, I mean, take care of yourself, mind, body, spirit, and always be finding ways to build relationships and add value.
And John?
I'd say be prepared to make very difficult decisions that will preserve your business, and also be very risk managed as you kind of look forward. And what that means is, if you see an opening and you think there's some risk there, but it may be worthwhile, just don't go whole hog and kind of manage your way into maybe the next product line or the next service or the next marketing push or whatever it might be. But really just be prepared to make tough decisions to preserve your business.
Thanks, John. And thank you all for joining me today. As an entrepreneur, this has been fantastic, and I'm just going to take all of your advice. And I want to thank all the viewers for tuning in as well. At JumpStart, we are here to help. And if you have questions we weren't able to get to today, or even additional questions that pop up, we encourage you to email them to us at askanexpert@jumpstartinc.org. You can view this as well as the rest of our COVID-19 webinar series and other resources on getting your business through this situation on our resource guide, which is also at jumpstartinc.org right there on the homepage. So check that out for help. Thank you again to all. Please stay safe, and we hope to see you soon. Have a great day.